Welcome to the Capital Gains Tax Solutions podcast, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy such as the Deferred Sales Trust is an amazing way for you to exit highly appreciated assets, defer millions of dollars of capital gains tax so you can create and preserve more wealth and help your clients, friends, and family do the same. Hey, today I'm your host, Brett Swarts, and I'm joined every episode by some of the best real estate, financial, wealth, and business minds in the world, where together we share secrets and ideas and try to unlock freedom for you and for each other by sharpening one another with different strategies. And today is no exception. In fact, the guest is now, I think, the third, maybe the fourth time on the show and on the YouTube channel. He's the founder and CEO of DLP Capital. He loves basketball like us, and us being my family and everyone who's maybe out there listening, and so much more. I want to just bring Don on the show right now. Don Wenner, how are you doing today?
Doing awesome. Thank you for having me here today.
Absolutely. And Don, give us a little bit more of your story. Folks, probably, I take it for granted because I feel like I know you more and more. A little bit more about your story and your focus, and then we can dive right into the topic at hand, which is building diversified multifamily wealth.
Awesome. Well, love to. And so again, my name is Don Wenner. I'm the CEO and founder of DLP Capital here in St. Augustine, Florida, where we call home as a family and where our organization's been headquartered for the past 7-8 years. But now for the past 17 years, we've been investing in attainable housing, workforce housing, housing that is and remain affordable for working families. And we do that as a lender, we do that as a direct sponsor, we do that as a developer, and we have different funds based on those different strategies that we create attainable workforce housing. And then we do all the underlying work to execute on that strategy, from construction management to development to property management and everything in between. So I'm the proud leader of an organization with 200 plus corporate team members and hundreds of team members out in the field executing on our investment strategies.
Yeah, amazing. And you guys have been able to grow one of the fastest in the country, and then the culture and the values and all of the amazingness of building an elite organization. And by the way, the new book that just came out, Building an Elite Career, which we're going to touch on here in a little while. But before we do all of that, I want to talk about the importance of building a diversified multifamily wealth, right? So what does that mean to you in today's environment, given the dollar and what's happening with inflation, given the uncertainty in the stock market and folks not having as much clarity and confidence when it comes to a lot of alternative investments, even within the commercial real estate space.
Yeah.
I mean, multifamily seems to be that one. I mean, you say mobile home parks is probably as well, industrial perhaps, or maybe those, if you had to do like a AAA type of thing, if you were to rate it.
Yeah.
What's the importance of building diversified multifamily wealth?
Yeah, so as you said, our most typically people would consider what we do as investing in multifamily, and that's a little bit of a generalization in that, a big part of the asset class today and what we invest in is single-family build-for-rent communities, so rental home communities that aren't your traditional 3-4-star apartment communities. We own a lot of that, but we also invest in single-family detached and attached kind of cottage-type communities. In addition, as you said, manufactured housing and RV campgrounds. So our focus is investing in housing communities, and there's different forms of housing communities, but what I think makes that asset class so great is, first and foremost, is the simplest fact, which is supply and demand, which is the supply of housing, rental housing, especially housing that's affordable for working families. We've had an undersupply since the U.S. was formed. I mean, there's never been a point in time where we haven't had a demand that exceeds supply. We haven't had a shortage. We've never been in a case where we haven't been there, but arguably we have the greatest undersupply of housing in history today. We're short, depending on who you look and how you analyze the data, 5 to 7 million housing units we're short right now, which is a big reason to why rents keep going up so much, why cost of housing keeps going up, because there's more demand than there is available housing, which is, to your point, about inflation, is most people would consider real estate an inflationary hedge, right? Because of that reason, right? As you have inflation across the sector of construction, of all the different areas of the economy, real estate benefits from that. And generally speaking, it passes through to the renter in terms of they pay more rent. So even though our basis to what we paid for the asset is staying, quote unquote fixed, our income is going up. And generally in inflationary times, the income goes up faster which isn't a good thing for the challenge for many working families, and that's what we're focused on. But it's a good thing from an investment standpoint that income is going up at an incredibly fast rate over the last few years. I should say the rent has gone up at a tremendously fast rate over the last few years. The average rent in America today is about $1,800 a month. It was about $1,000 a month less than a decade ago. I mean, it's an incredible growth in where rents are today from where they were just a few years ago.
Yeah, I think that makes a lot of sense, and that's a good part that you correlate between single family, less 40 units and below, and then the larger opportunities. And even then, you're diversifying within the housing is probably a better way to frame this conversation. It's like a diversified housing, building diversified housing wealth.
Yeah.
And as a part of that, you're also lending, right? You're lending. So talk about the importance of being able to lend to those that you understand how, because you're running it and you're building it and you're managing it, as well as the flexibility with some of the, let's call it semi-liquid, every 30, 60, 90 days or so.
Yeah. Yeah, so we're focused on, as you just said, on the ownership side is simple, which is the purpose here at DLP is building thriving communities is the short version of it, and so we focus on is building a thriving community, which is a safe, affordable place to live is the foundation. That's the starting point. But by investing in communities, i.e., there's generally at least a couple hundred units, and we have a pool, and we have walking trails, and we have a clubhouse, and we have on-site staff, people whose job is to just serve those residents, and we have community events and activities and wellness days and parties and all kinds of things going on where it's not just we own a housing unit, we own an entire community, and we're investing in our people. That's not only, again, really important and really great for local communities to pour into our residents and pour into their lives, but it's also good for business because they stay longer, which means lower delinquency, less vacancy, higher income, as well. And so that's what we focus on doing from an ownership standpoint, which is almost exactly the same as what we focus on doing as a lender. So in addition to us directly developing, building, and investing in these types of communities, we lend money to other real estate developers and operators who are also investing in building thriving communities. And so we get to come in that situation as a lender, providing them with a first position mortgage in most cases, and then putting their equity in behind us. And by being a lender, we get a fixed return on our money, so we get really consistent distributions. We do really short-term loans. We're just facilitating the improvement of the property until they can get into permanent debt, which our average loan pays off in on average less than 12 months, which allows us in turn to have phenomenal liquidity to investors. So I think investing in a lending fund, investing in housing, provides a lot of the same benefits of investing in the asset class, but with really consistent distributions and a lot more liquidity. So our liquidity provision, as you know, is 90 days redemption, but nobody's ever even waited 90 days in our history because of the underlying investment strategy is so liquid. Every quarter, every 90 days, I have hundreds of millions of dollars of loans pay off. Money come back in that we can redeploy out or honor a redemption request.
And it makes a whole lot of sense because in times like this, I think people need to have access to something that has some liquidity. And I know for a lot of our investors and our clients and the people that we work with, they feel more comfortable in stuff that is like this, the multifamily lending fund or the housing fund, lending fund is a better way to put it. And to know that it's not tied to I mean, even right now, what's sad what's going over in Israel right now in the Middle East and just the turmoil that's happening with the governments, even our government, the way that they're spending, the way that they're not very responsible, and it affects the greater stock market versus things that we can know, like, and trust, we can control and have transparency and accountability on the front line. And our headquarters is now with DLP Capital, right? Which I was talking about with my clients. Well, they call me. About once a week, one of the clients will call me and be like, hey, how's it going over there? Like, are you seeing anything? Like, as if like I have some inside track or just something going on. I'm like, if something happens, I'll be the first one to tell you guys, because we do have a substantial amount of clients that have invested with you guys. But to that point, before I forget, I've heard that there's a rumor, and this rumor is there might be some kind of basketball court or gym that's going to be created here. What's going on with that?
Yeah, well, I told you just when we walked in here, I spent 2 hours this morning with a bunch of our team members playing basketball at indoor courts that are across the street. But we have such a high number of people here love to play basketball, and pickleball is another obviously big growing activity nationwide, but certainly here at DLP that we are building indoor basketball and pickleball courts in our parking lot here. So we're pretty excited about that.
And to say that warms my heart is an understatement. In fact, Larry Hickernell, we were on a podcast a couple of weeks back, and we were talking, and I was saying, tell Don this. Like tell Don, of everything he's ever done, to build that basketball court may be the most amazing thing. I've literally been, I left California to move to Florida, and my wife says, well, what do you miss most? And I said, honestly, I miss playing basketball with all the guys. We would play every Saturday, Sunday, sometimes, in the holidays, like the early Thanksgiving, early morning run, and it's just, there's nothing, for me, this is one of my passions. So this warms my heart. And if I can get some kind of, little key card to get in there.
We'll have a key card.
My son and I and family and friends. Anyway, so that's kind of the side of the point. But I think it's a part of what you guys are about you talk about building thriving communities, right? And I think that's the key here. The difference is that you really care about building thriving communities on every aspect. It's not just a return on investment. It's a return on impact. And that impact always, typically, not always, if you're doing it correctly and have the team in place, and you're going to get a return on the investment. It doesn't have to be separate, right? Yeah. And so having the lending fund, and being that it's evergreen, being that it's on average 55% LTVs, being that it's first positions, very high net worth individuals, personally guarantees, having these systems in place, having these procedures in place, and then focusing on making an impact for their business at the operator level, as well as the tenant level, that is what has seen perhaps why you guys have grown so much. Or correct me if I'm wrong.
Yeah, we're very, very, very blessed, and the focus on building a thriving community, which is our purpose, dream, live, prosper, passionately make an extraordinary impact while building thriving communities. That means a lot of things, and to your point, and starts first and foremost right here at home, i.e. in our organization, and investing in the community that is the DLP team members and employees, and pouring into them. And the basketball courts is an example of that. The picnic we have tomorrow afternoon with our whole company down at the beach, and are examples of that. But then we get to not only do so here in our organization and invest money into physical communities, but we invest money into other operators' physical communities. But then we get to invest money into their organizations too. And so you'll be speaking at an event we're hosting down the street here in a few weeks, and we'll have many of our borrowers that we lend to, and prospective borrowers there, and some of their leadership teams, and we're pouring into them, investing in their family, investing in their legacy, helping them build an elite organization, helping the employees in our organization and the employees who work for our borrowers and our investors build elite careers, which is the book I just published a couple weeks ago. We get to pour into the lives of our investors and their local communities and their lives, and that's what the center of actually these big events we do. So for us, investing in communities is our stakeholder, or is our four stakeholders, which are the employees that work here at DLP, the sponsors, borrowers that we lend to, helping them build elite organizations, build thriving communities where they live and where they invest, the investors who invest into our funds alongside us pouring into their families, into their local communities, and then the residents, like you said, who live at the properties. And we right now have close to 90,000 residents who live at the properties we're invested in right now, which is pretty awesome.
Yeah, I think a theme that I'm picking up on is it's like investing into the intangible or the eternal or the forever to achieve the temporary returns, right? And then taking the temporary returns and figuring out how to make it even a bigger impact for the eternal or for the forever. And in fact, you have the impact report. That's what you call it. I love that you guys call it. You don't call it just the return report, right? Yeah. It's the impact report. And then you did mention the book, Building an Elite Career. Talk a little bit more about that. And I think that speaks to exactly what you're talking about, the investment into the team member, right? Yeah. And trying to make everything, not just an organization, but at the ground level for the team member. So talk about maybe one of the best kept secrets in the book that I think people would find value of.
Yeah. So just take a quick step back. So I wrote a book a few years ago now called Building an Elite Organization, the Blueprint to Scaling a High Growth, High Profit Business. And it's a book on how I run DLP, how we run DLP, how we build our culture, how we set strategy, how we prioritize, how we communicate, et cetera. And And we wrote the book to help other organizations, from the nonprofits or ministries we support to the borrowers, real estate developers that we lend to, the investors who invest with us into their organizations, whether that be a dental practice or a marketing agency or whatnot, to be able to build elite organizations, build disciplined organizations that can make a tremendous impact in whatever their business is. And it's a book I'm very proud of, and I can say humbly that it's, that many hundreds of companies and thousands of people have read and hopefully taken some value from. But that is a book written for the senior executives, the team setting the big picture. But it's dense, and there's a lot to it. If you're a frontline team member early in your career, it's a lot to try to apply the lessons in that book to your life. And so building an elite career is really, I'd call, half about, what do you need to do to be successful in the professional realm? How do you add value to an organization? How do you make sure that you're moving up and building your career by making sure the work you're doing is in alignment with the goals of the organization? How do you add value and make yourself invaluable to the leaders of the organization? And so it's a very practical guide to how you do so. And certainly if you're working in a company like DLP that's high growth and moving fast and entrepreneurial, it's going to be extra valuable. But then really the second half of the book, I'll call it, is really about building an extraordinary life. And what are the principles that if you apply to any areas of your life? We call it the 8 F's of life: faith, family, friends, freedom, fun, fulfillment, fitness, and finance. We think of living fully as when you're achieving what you want in all of those areas. And so we built kind of a lot of really tactical tools to help you invest and build the life you want. The starting tools we call the personal compass, which is a tool to design the life you want, starting with what are your perfect life numbers? What would be success for you? If you and I were sitting like we are right now today, and we were doing this again in 40 years, what would be the things that will have happened in your life for the last 40 years that you'd be able to say, you know what, Don, if we were having this conversation for 40 years, you'd be able to say, Don, you know what? Last 40 years of my life went perfect, right? What would have happened, right? What would have been? So you mentioned about our fast growth. We've been Inc. 5,000 11 years in a row and grown 50% every year for 17 straight years. But I promise you, in 30 years or 40 years, we're sitting on the bench, my number one accomplishment, thing I'm going to be proud of, isn't that I was on Inc. 5,000 for 40 years in a row or something, right? That's not the stuff that's really invaluable, that's really most important. What are those things that are most important? And centering yourself around that, right? What are the things that are actually priceless? And then figuring out what are your values? What is your mission? What do you want to be remembered for? And then breaking it down into your Living Fully dashboard. What are the goals you're going to accomplish this next year? And a lot of cool tools to help you just put all the different parts of your life together into a clear plan that you can go out and execute on. And that's one of the really important overarching tools. And then we teach on, a lesson that I've learned over many years of, what are the key commitments or choices that I believe will lead to a life of success, significance, and happiness, and that you can choose to apply in all areas of your life to achieve and accomplish everything you want out of life. And so it's a book about certainly building a great career, but more importantly about building an extraordinary life. So pretty excited about it. The first people who got their hands on it were our team members. That's the first audience of the book, but being able to provide that to anybody wanting to improve their life or grow in their career, it's been a lot of fun.
Amazing. I can't wait to read it, and my whole team's going to get a copy as well.
Awesome.
And thank you so much for that wisdom you just shared right there, which leads me to this next question, which has to do with momentum. I heard a saying by Craig Groeschel. He had a leadership podcast, and he talked about momentum is greater than the sum total of all of our leadership, resources, and strategy combined. I heard that, and I had to rewind it, and I had to think about it for a second.
Yeah.
And when you hear that quote, I'm curious, A, what do you think about that? And then B, how do you view momentum and keep the train of DLP just, going full steam ahead?
Yeah, I never heard that quote before, but I like that. And, one of our core values and something we focus a lot on here at DLP is what we call the 20-mile march. And we didn't come up with this. We took this name, the 20-mile march, from the great Jim Collins. And Jim Collins, in his best book, in my humble opinion, all the books are great, but his best book is Great by Choice. And in Great by Choice, unlike his most famous book, Good to Great, where he studies, great companies and that were great over 30 years versus parallel companies that sort of failed, and And it's interesting stories, but great by choice. He sets out over a 4-year research project to figure out, all right, well, if you want to build a great organization, what do you need to do, right? It's great to hear about other ones, but what do they all have in common? What is the secret sauce, right? And my takeaway from the book is that the secret sauce is the 20-mile march. And he tells the story of 2 expedition crews, a very famous story, Amundsen and I can't remember the other crew's name, but they both set out to go to the South Pole, and nobody had ever been there before, and so they both start out on this journey. 2 equally talented leaders and 2 similar expedition crews, same resources, and one of the expedition crews got there first and had the great accomplishment of first ever to get there and so forth. And the other group who got there 31 days later, not only did they lose and find out they got there, they were beat, but they all died on the way back, right? So, and the difference was the group who got there first, they literally physically marched 20 miles every single day. So it didn't matter if it was 50 degrees and the wind was at their back and weather was good, or it didn't matter if it was -10 and brutal and wind was at their face, they would still go 20 miles, right? They'd force themselves in bad weather. They'd modulate their effort in good weather to make sure every day they moved forward. Every day they kept up that momentum. Versus the group who died, they'd stay in their tent on bad days, and they'd try to go 40, 50 miles on good days, and they were letting the outside conditions dictate their day-to-day activities. And it's so easy to do that, right? You talked about the terrible situation going on in the Middle East right now, and unfortunately, there's always something going on, right? There's always something on, whether that's war or political change or crazy interest rate increase, or there's always something looming, or always something that may happen. And so many businesses, so many people allow those outside conditions, those things that are happening or might happen, to dictate what they do and stop their momentum, right? Stop their progress forward. So we try to have the 20-mile march of everybody in the organization understanding what are the things they do that are important, what are the things that they do that make a difference in our organization, make sure they're doing them each and every day, day in and day out, week in and week out, month in and month out, no matter what. And when I tell this story of the 20-mile march to all our new employees when they start, I always ask people, tell me the business analogy to this, right? And people will say, oh, it's like they'll say it's like the tortoise and the hare, slow and steady wins the race. And I always tell people the steady part's right, but this is called the 20-mile march. It's not a 1-mile walk. It's not the 3-mile skip. It's a 20-mile march every single day, day in and day out, so much that becomes the norm, where it's like doing 20 miles is normal. And it's not normal, physically going 20 miles in a day, right? It's a lot of massive work, but you build that discipline that becomes normal. Everybody's marching, really hard, consistently on the things that they do that generate results. And when you can get hundreds of people doing that, as we now have every day, it's amazing what we accomplish. Amazing the growth and progress that can be made in a year, let alone a decade, right? It's amazing.
It's absolutely amazing, and it's amazing to see it. And I've only kind of been, I guess, when I first met you guys about 24 months ago or so, and to now, have moved to California to here, I feel blessed to even be a part of being able to be invited into the den, if you will, right,
Yeah.
of DLP. So I'm curious, what is the one big domino that DLP best practices? It pertains to the 20-mile march, right?
Yeah.
To keep that momentum. So talk about the rhythm and the cadence, and maybe some of the meetings. But if you had to put it onto one thing, like what's the one that if you knock that one over, everything starts to roll with the 20-mile march?
Yeah, I mean, I think the really simple answer is, and this is, whether it's that question or it's a question of, what's been the key to our success, or the question to, what's the hardest part of the business, or what's most important, or, any of the kind of what's the singular factor in success of an organization. To me, it's really simple. It's people, but more importantly, it's leadership. So the center of people is leadership, and so the key is constantly investing in building leadership. And if you do that, right, leadership is what is culture, right? Your culture is the set of practices and activities that the leaders live. And so for us, everything starts with bringing the right people into the organization. Who exemplify our culture, right? The great Howard Schultz, when he was interviewed many years ago, the founder of Starbucks, and he was asking, how does he get people at Starbucks to smile so much? And he said, well, it's simple. I hire people that like to smile, right? And point being is, we know what our culture is, we know what we want to, how we want to operate, and we hire great people to lead and exemplify that, and then and shape the culture and so forth. So that's the biggest, most important part of what we do, is having the right people for our organization, which aren't the right people for Microsoft, right? Somebody who succeeds at DLP probably wouldn't do well at Microsoft, generally speaking, as an example, even though they're a great company, much bigger than we are. But the right people for our culture, for our organization, for our goals, for our mission. And then, from there, once you put the right people in place, it's making sure, everybody's rowing in the same direction. I believe strongly that everybody at DLP wants to win. I believe most people in the world, and there's not a person watching a podcast who isn't motivated to want to win, right? But in most organizations, what they fail to do is determine or identify what does winning mean for that person, right? So many people are coming to an organization and nobody knows what winning is, i.e., what is success for me in my job? And so we spend a lot of time to make sure there's clear expectations and key outcomes or numbers or KPIs. We use the term key numbers for every person in the organization, where they know, all right, this is what I need to accomplish to be winning. And they're in alignment with their leader on what winning is. And when you can put people in a position where they're winning, great things happen. You brought up basketball earlier, and I was just having this conversation with somebody this morning. I have outdoor basketball courts outside my window here, and I was telling the individual I was in a meeting with, Nick, I said, I could look, if there were a bunch of kids out there playing basketball right now, I could look out that window without being able to hear them. I'd know if they were keeping score, right? Because you could tell, right? If they're just shooting around, the level of intensity is very different than if score is being kept, right? We all can understand that, right? But the same thing applies to business. If everybody's, nobody's keeping score, if nobody knows what winning is, it doesn't mean people don't want to be successful. It doesn't mean they don't want to work hard, but they don't know where they're going, right? They can't operate with the same urgency, the same intensity, the same focus if they don't know what winning is.
And so on that point, DLP Community Buildings Fund, the DLP Housing Fund, but just talk about the Buildings Fund a little bit. I'm just curious. It seems to be the one that I think a lot of our clients are being very attracted to, right? They like the idea of 5,000 units in the next 3 years, and I think it's a brand new product that you're building for what typically a lot of people are still paying for, right? And you get a brand new product, a little bit more delayed gratification, if you will, but you're going to have a brand new product, right? Versus buying something that's 20 or 30 years old. So let's talk about the future for that and what you like about it.
Yeah. So the DLP Building Community Fund is a fund that I love and I'm glad to hear people are excited about, because we just heard it. You may know this. We just won a really cool award at the Wealthies, which is I'm told the kind of the Oscars of the wealth management industry for best new product for that fund, for a lot of the things I'll touch on here in a minute. But what I love about the fund, it's the biggest way for us to make an impact. And I mentioned earlier that this affordable housing crisis that we've had in America since the dawn of time, we have that issue because there's not enough housing. And so the biggest way we can make an impact on this crisis is we need to build more housing. It's that simple. And that's what we're able to do in this fund. Now, being able to build housing that is affordable is not easy to do, but that's the key. So that's what we do in the Building Community Fund. We build brand new housing communities that will be affordable for the families in those markets. And we do that, as you said, we're building brand new housing at a better return, at a lower basis than you can buy in most markets, 10, 20, 30-year-old properties. And normally, to your point, the delayed gratification of ground-up development of building new housing is, well, you're not going to make any money until construction's done, until the property gets rented and stabilized. And that may take 2 years or 3 years or 4 years, depending on the scope of the project. What's so unique about this fund is you get sort of your cake and eat it too, right? So we get the benefit of the great value creation that comes from building brand new housing at a great yield, at a great basis, that's going to provide, we expect, our highest returns of any of our funds. But also, we're still distributing cash flow every quarter. So we're actually paying out cash flow on each property before the property is occupied. And a lot of our sophisticated or smart investors say, well, how could that be possible, right? How do you generate cash flow on something that's not rented, that's not generating income, right? And it's quite simple, but it's kind of the magic of the fund, which is every single investment we make in the fund, we're investing essentially as preferred equity. i.e., there's equity invested behind the fund's investment by the developer. The developer could be me. Some of the deals, I'm the developer, or i.e., DLP is the developer, but I'm the one putting in the equity. Or some of the deals, it's another great developer who's putting in equity behind us. And what's great is not only is there equity subordinate to us, further insulating our investment with personal guarantees and so forth, but also that developer is responsible to make regular distributions on the equity investment that we make. So essentially, we sort of get paid like debt in the respect that we get paid regular monthly income. In some cases, the developer actually just pays all the income right up front. They're required to come with the money up front to pay the distributions throughout the life of the investment. But whether they pay it up front or they pay it over as we go, either way, actual cash is coming in from the developer to allow us to pay distributions to the investor while the property is being built. Also further insulating the investors in the fund because the developer is putting in more and more money that's fully subordinate till we get all of our money back in the fund plus get a double-digit teen return on our money. The developer doesn't get a dollar back. So with that structure, it allows us to do a lot of really great things, a lot of good, get the highest ultimate return potential by building new housing, but also have regular current distributions, which is sort of the holy grail. When you can build new housing and get the biggest income potential, but also get cash flow at the same time, we think is a pretty unique special offering and still have liquidity. So our investors aren't stuck that they have to stay in until all these projects are done and stabilized. They have annual liquidity. They can get out if they choose to and not have to wait till these properties are done and stabilized and so forth.
Absolutely amazing. It feels like accountability and incentive for developers to get the job done.
Yeah.
As well as it aligns with the investors' goals of, once a year liquidity, right? I think it's like a 60-day period, right? And then number two, the potential for bigger upside. I mean, and I imagine that was you and the leadership team, whoever you guys structured this.
Yeah.
And I think this is part of what you're talking about for the culture and like focusing on like, hey, how do we make this the most unique, amazing offering for all of our investors, right?
Exactly.
And then we got to go negotiate with the developers to make sense, right? Which you did. And here you go.
Exactly. Yeah. We've been doing ground up development for many years at DLP. We started doing build for rent communities, which means building single family communities for rent since before it had a name, before it was popular. But we never had a fund for ground up development. And the reason we never had a fund is because we came to realize early on that our investors want regular distributions, they want regular cash flow, or at least the option of it. They want regular, consistent growth to their investment, whether they're taking distributions or letting it grow. And we always looked at it like most and said, how do you do that in ground up development, right? So up until a couple of years ago when we launched the fund, I didn't have any. It was just me doing equity. And then as we started growing that portfolio, we said, we've got to be able to figure this out. And that's when we developed this structure and went, to your point, went to market and determined could we sell this to the best developers and get them on board with this structure. And obviously we've been able to do so. And so it's been an absolute awesome structure. Hence why we just won that award for it, because the way we've been able to craft this structure, it's been such a win. And especially in a market like today where it's so hard to get capital, so hard to get liquidity for ground up development, for so many developers, this is a huge deal for them to be able to get access to equity in this market to build housing when we have the banking liquidity crisis and some of the issues we've had this year.
Yeah, it sounds like you provided certainty of execution for capital to build their projects is what you say, hey, look, you're going to put up this, but we're going to put up the majority, right? And this is going to also incentivize and align the interest for accountability and deliverability, and we want certainty of execution to build it.
Exactly.
And so making that match, and it's 8%. I mean, it's not a... 8% is, and it's paid quarterly. Right. It's even better than the housing fund, which is paying 6%, right? But it's paid monthly. So and then the lending fund is around about 10%, but it's averaged 12 over the life of it. But I mean, to have that dynamic, diversified housing wealth in all three phases, I think is what and then we haven't really touched on the credit funds yet. And to be fair, for our clients and for us, we've only ever invested in building, housing, and lending so far, and we're taking bites at a time, if you know what I mean.
Sure.
But anything else to add before we wrap it up? Because I think this has been an amazing conversation. But anything else you want to add about the book, about the the fourth quarter come in here, maybe even opportunities? Are you feeling like the multifamily markets the sellers are starting to actually, reset their expectations? Do you feel like that the rate caps that are expiring and are you seeing more distress and more opportunities to buy in the housing fund?
Yeah, so thank you. And I can wrap up kind of with that. So, I mean, in terms of the market conditions and where we're seeing opportunities, for us being that we sit in the seat of the lender, we sit in the seat of owning a large portfolio of existing housing, almost all with long-term fixed debt. We sit in the seat of developer. We're actively looking to acquire and invest and buy new properties. Any kind of volatility, any change, it has pros and cons, and the job of a fund manager is to be able to figure out the different moving pieces and figure out how do you generate the return targets in a changing environment. And I'm very confident in our ability to do that. And overall, these kind of volatile situations now, mainly coming off of the increase in interest rates and all the ripple effects of that, has been a huge benefit to us. What we expected when we started the year was that we would see a lot more distress. We thought there'd be more owners who needed to sell because they have expiring debt or have pressures to sell because now with higher rates they can't cash flow, or we'd see more sponsors coming to us needing, as they go to refinance their properties into lower amount of leverage, maybe we'd come in and provide them pref equity to sort of fill that gap between 75% loan to value they have now and the 60% agency loan they can get at takeout. We actually haven't really seen hardly any distress yet. And that in one way is, we wish we saw more when we had more investment opportunities, and I think there will be some coming. But on the positive side, the market's just so strong because occupancies are so high, collections are great, rents are still growing. So I think a lot of operators have been able to and have their investors do so and their lenders kind of hold on, and nobody knows when rates exactly will start coming down, even if it takes a bit longer than some of us hoped for. I think there's just enough confidence and now data and evidence that people have been paying attention to this since the 2008 cycle and so forth, that this asset class does so well that so far there just really hasn't been a lot of distress. And that just means sellers are still confident the values are up here and buyers want to pay down here. So it just means there's such a gap that not much is transacting. But because it's cash flowing, most people are okay with it. So we haven't seen a lot of stress yet, but that can change quickly, right? In COVID, when COVID hit, we went under LOI on a $1.7 billion portfolio in late March of 2020, and it didn't end up closing because the market came back so quickly and they didn't move forward. But my point being is, we were then just like then as we are now. We're looking for opportunity. We find an incredible opportunity, we're going to be jumping on it quickly, but haven't seen a lot of distress yet.
Great answer and great overview. Thank you for sharing that, Don. I want to thank you for being on the podcast.
Yeah, thank you for having me.
I want to thank you for your leadership, your gifts that you're blessing everyone with, and building this amazing organization, and then being our number one strategic alliance at this point for all of our clients. And we're putting our confidence and our hope and our trust in you and the leadership team. So thank you so much.
Thank you.
And that being said, I want to thank everyone for listening to that episode of the Capital Gains Tax Solutions podcast. We're also streaming Expert CRE Secrets as well on the YouTube channels. And, we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy, such as the Deferred Sales Trust, is an amazing way for you to defer that tax when you exit highly appreciated assets, but then also be able to invest into groups like DLP Capital to create and preserve the wealth, to grow the wealth, have that freedom that you desire, make an impact with your wealth. Each of them are so important, and so we're so privileged to be able to bring DLP Capital to you, either as a potential investor and/or our current clients. Thank you so much. With that being said, please rate, review, subscribe. Check out Don's new book, Building an Elite Career, and we'll talk to you again real soon. Bye now.